Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, so today is Orthodox Easter.
Woohoo!
So, for all of you Orthodox people, happy Easter.
Mm-hmm.
The regular Easter that pretty much everyone else celebrates was already happened, right?
Right, and Passover is behind us too.
Passover is behind us too. Okay, the country that you come from, this is a big deal. Like, this is the big day.
Well, this is, so Romania is primarily Orthodox, so Orthodox Easter is what is generally celebrated there.
Perfect. Now that we've got that out of the way, that was the cultural minute.
There you go.
Romania gets a cultural minute every year. It's part of Oana's contract. We spend 1 minute in one episode a year to talk about Romania. Okay. I made a prediction a few months ago. Oana, what was that prediction?
That the sun would rise.
The sun would rise.
The stars would shine.
Yes.
And the Crash Bros would predict another crash.
And what would the trigger? What was the thing that was going to cause the Crash Bros to start hammering on, oh my gosh, this is it. This is finally the housing crash.
So the end of the spring season would come. Inventory would climb a little bit. And the Crash Bros would have their moment in the sun, beneath the stars, and in the glow of the moon.
Okay, so this is actually, I'm starting to see, there's a couple of them on Twitter, if you follow them, you know what I'm talking about, but they literally have cherry-picked a couple markets where inventory's up like 25% from a couple years ago, right? And then they're making a big deal about it, right? Like, oh my God, and like panic and stuff, crazy, right? Remember, there's like over 300 major housing, what are the Fannie Mae considers major housing markets.
Okay.
Like McAllen, Texas, you wouldn't think that is, but it's one of the like top 300. Spokane,
really?
Washington. Oh yes, McAllen, Texas is like 90.
They got like 50,000 people.
No, they don't. They have like 150,000 people.
I'm sorry.
Yeah, my dad, my whole family's like half of McAllen is related to me. Anyway,
there you go.
Okay. So here's the thing. This is what we did. We went out and found this chart. Now this chart, this is the housing inventory in thousands. So when you look over to the right and you see that pay, that means there are thousands of thousands, which is a million. I have no idea why the person who made this chart didn't just put U.S. total housing inventory and then put 4.2 M, 3.6 M. Okay. Now, this, as you can see on this chart, this goes all the way back to 1983, and it shows housing inventory all the way to today. 2024 is all the way to the right there.
Okay, stop.
Okay.
And if you were in the housing market in 1983, then give us a thumbs up because we want to hear from you. We want to know what housing was like back in 1983. Todd and I were extremely young in 1983. Extremely young in 1983. And while we do remember the housing market in 1983, we were not active participants in the housing market in 1983.
Nope, I was on active duty. I was in the military by then. Okay, so what's interesting about this chart is it shows basically the volatility of what interest rates did to housing from the 80s up until the late 90s when it sort of, housing kind of got its own steam. And then you can see the big run up in inventory, which precipitated the housing crash because it was mainly overbuilding. There was a lot of speculation in building. And you can see that 2006, 7, 8, 9, 10, 11, basically, there was a lot more homes than people that would buy them. And push home prices down, right? Mm-hmm. But what's interesting, though, is you see this sort of whiplash effect where it never got back to normal. It just kept going lower, lower, lower. Now these trend lines don't really mean anything. Whoever made this chart put the trend lines in. But we're going to point out a couple things about this chart. Mm-hmm. Okay, first, the Crash Bros, if you go on Twitter and you look at their charts, you know who these people are. They have these their websites and stuff. Okay, what they'll do is look at the very lowest inventory was. Now, if you look at the blue line that goes up and down, really quick, Oana, why does it look like over the course of exactly a year, it goes up and down and up and down? What is that?
That's seasonality. We talk about that all the time. It just has to do with the time of year. Inventory builds, inventory drops because homes get absorbed. They get sold and then inventory builds again the next season, and so on.
Okay, the tops are usually like October, maybe November.
Sure.
The bottoms are April, maybe May.
Okay.
Right? Okay. All right. What they've done, first of all, if you look all the way to the right and all the way at the bottom, and you see the very, very lowest where inventory like ever was, right? What they've done is they have basically taken this data and they won't show you anything else to the left of that. So anything from that date back to 1983, they act like, hey, this is normal. 2021, yeah, I mean, there was only 700,000 houses in the whole United States available for purchase, but now we're up to 1.1 million. And look at how steep this is rising. Oh my gosh, it's up. Oh, Phoenix is up 25% from 2 years ago. Oh my, prices are probably going to crash. Like 25% the market can't handle it. But what you're not realizing is the whole entirety of where we actually are. You can't just pick a point that was the lowest ever. And I actually said this about a year ago too, that the crash bros would basically use these lows, and as soon as inventory tried to get back to normal, would get back on this stupid narrative, right?
Well, so it's about context, right? Because then we talk about this all the time. So if in a neighborhood you have one home for sale, okay, and if now in that same neighborhood you have two homes for sale, oh my goodness, the number of homes for sale has doubled. Well, okay, but the neighborhood can clearly absorb two homes, right? That's not a big deal. And it's the same kind of thing here. We are coming off, all-time lows. So whatever increase in inventory we have right now, it's very manageable. We still have less inventory than we have people looking for homes. So we're not at a point where the amount of inventory exceeds the capacity of the market to absorb that inventory.
Here's another interesting stat. The population of the U.S. in 1983 was about a little over half of what it is now. Mm-hmm. But look how many more houses were available with half the population. Mm-hmm. It puts this in perspective. Clearly, for a crash to happen, the only real housing crash we had was that 2006, 7, 8 bubble. It had nothing to do with prices. It was because of overbuilding.
Right.
And loans.
So it was a situation where you had more supply than demand. You simply didn't have enough people to purchase those homes, which is that whole supply and demand thing that we talk about a lot. So long as you have less supply than you have demand, then prices will either remain stable or increase. If we get to a point where we have more supply than demand, then the reverse will happen. But in order to get there, that's going to take literally millions of homes being built because our population is far greater than it was then, and we simply don't have enough homes to satisfy that demand.
What's interesting is if you look at this chart, pretty much, if you take that 2.4K line, pretty much above that, home prices tended to decline. Mm-hmm. And any time you were below that, I'm not talking about the diagonal black line, that's completely meaningless, but about 2.4 million listings, home prices tend to go up. Inventory would literally have to double, which is not going to happen. It would more than have to double just to get back to that. Remember, we were at 1.4 million houses in the U.S. available. Mm-hmm. We still have, I think we're below a million now, we're about 800,000. We peaked last spring or last fall at 1.1. I think we'll get back to 1.1, 1.2, maybe 1.3. Mm-hmm. But you can see here, remember, if you go on this chart and look at 2018 where the little line intersects, and then there's two humps, that was the end of 2018 and then 2019. 2019 was the first time the Crash Bros were talking about the housing crash. Mm-hmm. Oh, that was the big one. That was going to happen. And then they reiterated it 2020, 21. Every year there's supposed to be a housing crash, while literally every important metric, which is supply, is going against them. So the reason why we're doing this video is we want to give you guys perspective to what actually causes, because they have this very narrow focus of these sort of immature, childish, like they don't really know what they're talking about, but they're going to make up stuff and try to convince you that this is oh my gosh, this is the thing. But I just wanted to point out, when you go on their Twitter and see that, XYZ market inventory is up 25% from a couple years ago, that's like, oh, look, the foreclosures are up 10% from a year ago. Well, a year ago was the lowest number of foreclosures ever in the history ever. And we just went up 10%. It's nothing. We're still, 1/10 of a normal market of foreclosures. And
Right.
we're 40 times less foreclosures today than we had in any of the years during the housing crash around 2007, 8, or 9.
Right. So foreclosures are, for the most part, in the rearview mirror. We've talked about this a lot before. Foreclosures are not something that banks want to do. They are not profitable. They are poor optics in the world of social media. So there are all kinds of programs to mitigate that and to do workouts and that sort of thing. Plus, remember, probably more than 90% of homeowners out there have equity that is sufficient to enable them to sell the home and fully satisfy the debt. So because of that, foreclosures are not really something that we're going to see a lot of. It doesn't mean that they don't happen. They do, but there are extenuating circumstances beyond the property. It usually has to do with some other life event, like, for example, somebody passing away without an heir or without any sort of directive and that sort of thing. So there are all kinds of reasons why they happen, but there are extenuating circumstances far beyond affordability or anything having to do with the property.
Inventory in the U.S. has started increasing. It does every year at this time. Mm-hmm. It will do this until October. The best week to sell your house was sometime in April. Mm-hmm. Put it on the market and sell it. We're past that. We're into May. If you're thinking of selling, I would probably do it sooner rather than later. If you're saying, I really want to wait till October to put my house on the market, good luck. That's usually the worst. Like, October is usually the worst time because that's usually when there's the most homes on the market with the least number of buyers, but it tends to get better.
Right, but at the same time, October does have serious buyers, so not casual buyers, meaning people who are really trying to get a home before the end of the year. So the people who are coming through the house in October, they tend to be more serious buyers. So even though there are fewer buyers on the market, I think that those are more serious buyers.
The problem is there's less buyers than the number of houses on the market, and your house now has to be more competitive, which is why they tend to compete more on price. Right. They tend to beat up, you don't get multiple offers. They go say, hey, there's 3 other houses I could buy. I'll just offer you $15,000 less and see if you'll take it.
Right.
And then somebody finally goes, fine, we'll just do it. Bless you.
Thank you.
Here's the thing. The inventory will increase. It will increase until October. The cash pros will probably make $30,000 or $40,000 a month for the next few months until what happens? All of a sudden, inventory will turn and start decreasing again. And then, we're going to go through this cycle. We do this every year. What are home prices going to do? I don't know. I do know this, that if I had to pick what if a home was going to be worth more or less today than in 5 years, I would say more in 5 years. And you say, oh, but how can you be so sure? Well, it's easy. On average, home prices go up 4 or 5% a year. So on average, they go up 25% every 5 years. Now, yes, there have been some 5-year periods where they didn't go up, but of the last 100 years, if you break those into 95 5-year periods where you go year 1 to year 5, year 2 to year 6, I would say 97 of them, home prices went up. So all I'm doing by saying this is saying, look, historically, this is what's happened. Mm-hmm. And here's the other thing. We just did this rent versus buy thing where it's $2,700 a mortgage, but then it's only $1,900 if you rent. Well, that's because interest rates are what they are. And if you wait 5 years, you're likely to pay 25% more for the house. And then if interest rates are less, that's fine. You may still end up paying the same amount. And you've been renting for the last 5 years. And if you buy now, then you've got 5 years of appreciation. Your house over 25 more. And when interest rates drop, you just refi. You don't have to deal with it. And I'll bet that 5 years is the break even. If you bought a house today for $2,700 mortgage payment, and then in sometime in the next 5 years, interest rates almost certainly will go below 5%. You refi that thing, you'll pay less than someone who's renting in 5 years, because I think rents are just going to go up. They've just gone up for the last 4 years. I think they're just going to keep going up. So I want to put perspective on this. I know that's sort of outside of what we're talking about here with inventory, but the reason I'm saying that is because I'm looking at this inventory and I'm not seeing anything change. The total number of homes, we had about 5 million extra surplus homes in the US in 2006. We now have probably 8 million deficit, meaning single family homes, we have less than we could put people in. So what does that do, Oana, when you have that's called shortage? What happens to price during period of shortage?
Well, so prices either remain the same or increase when we have less inventory than we have demand for a product. Kind of to briefly touch on what you said, we haven't had interest rate reductions from the Fed for a while. The Fed has said that they are very keenly looking at 1 or 2 interest rate reductions for the balance of this year, and I think you're going to see that reflected in mortgage rates. I think mortgage rates are going to be a little slow to come down this time around because they were anticipating that a few times in the last 12 months, and that didn't materialize. So I think they're going to be a little slower on this, but I think that some of the mortgage lenders are going to be more aggressive, and you should be able to get a pretty decent rate in anticipation of the Fed reducing the federal funds rate.
And if you think, let's say there's a recession, if you think the recession will bring millions of homes onto the market within days because of foreclosures.
No.
Oana, what's the current time to foreclose, roughly?
So, depending on where you are, it could be anywhere from a year to 3 years.
Yeah. The foreclosures that we're seeing in Nevada, most of them were before the thing that happened in 2020.
Right. But I'm just saying, just the regular foreclosure process, even if when you're eliminating the foreclosures that were not put through because of the thing that shall not be named, even when you're discounting for that, just the regular foreclosure process in most markets runs anywhere between a year and 3 years.
Home prices have gone up 5 of the last 7 recessions. And here's what's interesting about we should do a whole video on what happens in a recession. But here's the interesting thing. Imagine this. You've just lost your job. You have your $1,100 a month mortgage payment because you bought the house in 2018 or 19. You got a 2.5% mortgage on the house. You have $150,000 of equity you don't want to give up. Renting the house would be $2,200. And you got a bunch of money in the bank because, remember, you've been saving money because your mortgage payment's basically super low. Do you say, we have to get rid of the house and go rent because we can no longer afford this $1,100 a month mortgage payment?
No.
Okay.
So that's clearly not what would happen. I mean, most people would continue to make the payment. Some people would maybe reach out to their lender and see if they can get some sort of a workout where they maybe make lower payments temporarily while they're out of work. I mean, there are all kinds of remedies for that. So I think most homeowners are savvy enough to figure out how to get through this period. This is something that happens to a lot of people, regardless of what industry you're in. Things happen. Jobs get downsized. You lose your job for whatever reason, but then people get other jobs. I mean, it's not like you're going to be out of work forever. You've got good skills. Clearly, you have good skills because you earn enough money to qualify to purchase a home. So that tells you something right there, that there is hope and that you will get another job.
Until inventory gets back up to close to 2 million, on an ongoing basis, I think we're just going to see upward pressure on home prices.
Right.
And I think that's going to also drive rents higher. And the reason I think it's going to drive rents higher is because landlords will realize that they have this ability to keep raising rent. And as they raise rent, then the other landlords in the area go, oh, I just realized that, because we just went through this. We've got a house. It's $2,000. We think maybe that's a little high. A year later, they move out. We go look. Everyone's asking $2,100, and the homes are renting within a couple weeks. We're like, oh, we can ask for more money. And then what happens a year later? Oh my gosh, now it's $2,200. It's the same house. We're just getting $100 more a month out of it because we look and see the other landlords are raising rents and that they're sticking. People are renting the houses. Right. And it's the market. It's not collusion. It's simply, that's the market. That's what the market will bear.
Right. So if you're interested in buying or selling a home in Las Vegas or anywhere in the U.S., please feel free to reach out to us and we'll be happy to help you. Please remember that We love your comments. So leave us your real estate related comments down below. We appreciate them. Please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.